1. U.S. tariffs to Boomerang on August 1st. Impact on global trade and economy. 2. Trump's July 9th tariff deadline. Global trade war implications explained. 3. Dow futures drop as tariff deadline approaches. What you need to know. 4. Trump threatens 10% tariff on BRICS allies over anti-American policies. 1. U.S. tariffs to Boomerang on August 1st. Impact on global trade and economy. Imagine a scenario where the global trade landscape hangs in the balance, with countries facing a stark choice: negotiate new trade deals or face the wrath of tariffs reverting to their previous high levels. This is precisely the situation the world finds itself in, thanks to statements made by U.S. Treasury Secretary Scott Bessent. By August 1st, countries without new agreements in place will see their tariffs snap back to where they were in April, potentially causing significant economic ripples. During an interview on CNN's State of the Union, Bessent clarified that President Trump plans to send letters to various trading partners, warning them that unless they expedite negotiations, they will be hit with the tariffs reinstated to their April 2nd levels. This move is expected to prompt a flurry of deal-making activities. So I think we're going to see a lot of deals very quickly, Bessent emphasized. Back in April, Trump set a 90-day deadline for countries to renegotiate the steep tariff rates he introduced during his Liberation Day speech. However, he briefly paused these rates a week later, establishing a new 90-day window for negotiations. The initial deadline expired on Wednesday, leading to some confusion regarding the current status. When CNN host Dana Bash mentioned a new deadline, Bessent clarified that the August 1st date is the one to watch. It's not a new deadline. We are saying this is when it's happening, he stated. If you want to speed things up, have at it. If you want to go back to the old rate, that's your choice. Trump himself referred to an August 1st deadline on Friday, further muddling the waters. A White House spokesperson did not provide a clear answer when asked if the April 2nd rates would return on July 9th or August 1st. Trump's statements have been inconsistent, swinging between suggesting flexibility and then asserting firmness. By the time of the interview, Trump had already committed to sending letters to countries, aiming to have them fully addressed by the 9th. These letters will detail the tariff rates ranging from 60% to 70% to as low as 10% and 20%, depending on the specific agreement reached. It's important to note that tariffs are typically paid by importers, who may then pass on some or all of these costs to consumers. This means that while the immediate financial impact might fall on businesses importing goods, the ultimate burden could reach consumers in the form of higher prices. Interestingly, Bessent mentioned that many countries haven't even reached out to the U.S., despite initial projections that dozens would seek to negotiate deals. In April, White House trade advisor Peter Navarro expressed optimism, suggesting there could be up to 90 deals within 90 days. Trump echoed this sentiment, stating that countries were eager to make agreements. However, the renewed uncertainty surrounding tariffs is likely to unsettle financial markets. Stock futures dipped on Friday after Trump's mention of the country letters, and the recent calm in stock prices may be short-lived if the situation remains unresolved. To date, Trump has imposed higher import duties on automobiles and auto parts, steel, aluminum, and goods from China and Vietnam. As we approach the August 1st deadline, the eyes of the world will be on how countries respond and whether a resolution can be reached before the tariffs kick back into full effect. But here's where it gets controversial. Will the U.S. stick to its guns and enforce the August 1st deadline, or might there be room for further negotiation? And this is the part most people miss. How will the increased tariffs affect consumer prices and global trade dynamics? Your thoughts on these issues could shape the future of international relations and economics. What do you think? 2. Trump's July 9th tariff deadline. Global trade war implications explained. The global economy is currently in a state of heightened anxiety as we approach the pivotal deadline of July 9th, set by President Donald Trump. This date marks a crucial moment for numerous countries that must either finalize trade agreements or face the prospect of significantly increased tariffs. This deadline follows Trump's announcement in April, where he temporarily paused his most severe tariffs for a period of 90 days. This decision came after his ambitious Liberation Day plans caused considerable turmoil in the financial markets. With billions of dollars in international trade hanging in the balance, nations that trade with the United States are urgently working to negotiate agreements that will shield their economies from potential harm, especially given the ongoing unpredictability surrounding Trump's future actions. So, what can we expect once the clock strikes midnight on July 9th? The Trump administration has made it clear that countries that do not secure trade deals with the U.S. will be subjected to higher tariffs. However, there remains significant uncertainty regarding which nations will be affected and the extent of the tariff increases. In a recent statement, Trump indicated that he would begin dispatching letters to specific countries this week, detailing the new tariff rates. He also mentioned that he had successfully negotiated several new trade agreements. Trump assured reporters that he would either send a letter or finalize a deal with most countries by the Wednesday deadline, although he did not specify which countries would be involved. During an interview with CNN, U.S. Treasury Secretary Scott Bessent emphasized that countries failing to reach an agreement would face increased tariffs starting August 1st. He refuted claims that the deadline had shifted, asserting that tariffs for the affected nations would revert to the levels initially announced on April 2nd. However, Trump hinted that tariffs could soar as high as 70%, surpassing the previously stated maximum of 50% from his Liberation Day initiative. Adding to the complexity, Trump recently threatened to impose an additional 10% tariff on countries that align themselves with the anti-American policies of BRICS, a coalition of 10 emerging economies, including Brazil, Russia, India, China, and South Africa. There will be no exceptions to this policy. Thank you for your attention to this matter, Trump declared in a post on his Truth Social platform. Deborah Elms, the head of trade policy at the Heinrich Foundation in Singapore, expressed her concerns about the conflicting information emerging from the White House, stating, "It's getting harder to guess what might happen given conflicting information from the White House." She noted that the absence of finalized deals before July 9th was not surprising, given the U.S. was both issuing threats of new, potentially higher rates and suggesting that deadlines could be extended if offers were deemed attractive enough. As of now, only a few countries, namely China, the United Kingdom, and Vietnam, have successfully negotiated trade deals that have reduced Trump's tariffs, though these tariffs have not been completely eliminated. Under the agreement with China, tariffs on Chinese goods were lowered from 145% to 30%, while duties on U.S. exports decreased from 125% to 10%. However, this deal merely paused the higher tariff rates for 90 days, leaving many unresolved issues between the two nations. The agreement with the UK maintained a 10% tariff rate, while Vietnam saw its 46% levy replaced by a 20% rate on its exports and a 40% tariff for transshipping. Other significant U.S. trade partners, including the European Union, Canada, India, Japan, and South Korea, have confirmed that negotiations are ongoing. Trump administration officials have indicated that discussions are primarily focused on around 18 countries that account for the majority of the U.S. trade deficit. Recently, The Washington Post reported that the EU, the largest trading partner of the U.S., was working to finalize a skeletal deal that would postpone resolution on their most contentious issues before the deadline, in an effort to avoid Trump's proposed 50% tariff. Additionally, India's CNBC TV18 reported that New Delhi anticipates finalizing a mini-trade deal within the next 24 to 48 hours, with the average tariff rate expected to be around 10%. Andrew K. McAllister, a member of Holland and Knight's International Trade Group in Washington, D.C., suggested that while Trump is likely to announce a limited number of deals similar to those with China, Vietnam, and the UK, most countries are bracing for substantial across-the-board tariffs. "My view is that tariffs are here to stay," McAllister stated. "I see the bargaining chip as the level at which the tariff is set. For countries that the president and his administration view as imposing significant tariffs and other non-tariff barriers against U.S. products, he is much more likely to impose higher tariffs." What could be the economic ramifications of Trump's trade war? Economists largely concur that prolonged steep tariffs would lead to increased prices and stifle growth in both the U.S. and global economies. Recently, the World Bank and the Organization for Economic Cooperation and Development, OECD, downgraded their forecasts for the global economy, reducing their growth predictions from 2.8% to 2.3% and from 3.3% to 2.9%, respectively. However, predicting the impact of Trump's trade war has become increasingly complicated due to his administration's frequent reversals and mixed messages regarding tariffs. While the most severe tariffs have been temporarily paused, a baseline duty of 10% has been applied to all U.S. imports, and tariffs on Chinese exports remain at double-digit levels. J.P. Morgan Research has estimated that a 10% universal tariff combined with a 110% tariff on China could reduce global gross domestic product, GDP, by 1%, with the impact on GDP decreasing to 0.7% if a 60% duty on Chinese goods is implemented. Thus far, the repercussions of the tariffs that have been enacted have been relatively modest. However, analysts caution that inflation could surge once businesses deplete their inventory stockpiles that were built up in anticipation of rising costs. Despite concerns about significant price increases in the U.S., annualized inflation was recorded at a modest 2.3% in May, which is close to the Federal Reserve's target. The U.S. stock market, after experiencing sharp declines earlier this year, has rebounded to reach an all-time high, and the U.S. economy added a surprising 147,000 jobs in June. Nevertheless, other indicators suggest underlying unease. According to the U.S. Commerce Department, consumer spending fell by 0.1% in May, marking the first decline since January. As for the overall economy, the situation remains uncertain. The jury's out on whether we're still waiting on the worst of the tariff hit, noted Dutch bank ING in a recent report. The delay in China's tariff levels likely came just in time to avert a more serious recessionary threat. The latest jobs report certainly doesn't indicate a collapse in the labor market, but if we consider time lags, this is typically the last area where economic damage becomes evident. Sentiment remains fragile, remember. But here's where it gets controversial. Are these tariffs truly beneficial for the U.S. economy, or are they merely a temporary fix that could lead to long-term consequences? What do you think? Are you in favor of these trade policies, or do you believe they could backfire? Share your thoughts in the comments. 3. Dow futures drop as tariff deadline approaches. What you need to know. The clock is ticking on a critical trade deadline, and Wall Street isn't thrilled. Here's why the next 2 weeks could redefine global markets. A new trade showdown is brewing as President Trump's 90-day tariff truce nears its July 9th expiration. Markets had hoped for a lengthy extension, but administration officials dropped a bombshell Sunday. Tariffs could snap back to their controversial Liberation Day levels as early as August 1st unless deals are struck. Translation? The breathing room for negotiators just shrank from months to weeks. But here's the twist. Treasury Secretary Scott Bessent warned these tariffs could boomerang back to April 2nd rates, the same levels that triggered a historic stock plunge before Trump hit pause in May. Commerce Secretary Howard Lutnick doubled down, stating August 1st is now the hard cutoff, though he hinted the president is still shaping the final rates and deals. How are investors reacting? Futures tied to the Dow Jones Industrial Average slid 120 points, 0.27%. Sunday evening, while S&P 500 and Nasdaq futures dipped 0.41% and 0.5%, respectively. That's a milder drop than Friday's panic sell-off after Trump threatened 70% tariffs, but the message is clear: uncertainty reigns. Let's break this down. The stakes. April's Liberation Day tariffs caused chaos, erasing trillions in market value before the 90-day pause. A return to those levels could test whether last spring's crisis was a one-time shock or a preview of what's to come. The deadline dance. Why the sudden shift from 90 days to just 3 weeks? Officials claim it's about urgency, but critics argue it's a high-pressure tactic. Is this a masterstroke to force deals or a reckless gamble with the global economy? Market mood. While stock declines are modest so far, bonds and commodities tell a different story. The 10-year Treasury yield dipped to 4.33%, gold slid 0.53%, and oil prices tumbled 1.72% after OPEC Plus announced surprise production hikes. The dollar also weakened against the euro and yen, a classic sign of trade war jitters. The wild card, Federal Reserve meeting minutes due Wednesday, could add fuel to the fire. If policymakers signal rate hikes to combat tariff-driven inflation, markets face a perfect storm of tightening monetary policy and trade friction. Now, the controversial question: are Trump's tariffs a necessary tool to rebalance trade, or a self-inflicted wound on the U.S. economy? And with midterms looming, does the administration even want a deal or a scapegoat? Share your take below. Do you think negotiators can pull off a last-minute deal, or are we sleepwalking into another market meltdown? The world is watching and the countdown has begun. Explore the 2025 Fortune 500 list here. Link. 4. Trump threatens 10% tariff on BRICS allies over anti-American policies. The world is on edge as President Trump's latest tariff threats could reshape global trade dynamics, targeting nations that align with the BRICS group's so-called anti-American policies. But here's where it gets controversial. What exactly constitutes anti-American behavior, and who gets to define it? This question looms large as the U.S. teeters on the brink of a new trade standoff. Let's break down the stakes and the tangled web of alliances, economic leverage, and geopolitical chess moves at play. The BRICS alliance, Brazil, Russia, India, China, and South Africa, has long been a thorn in the side of Western-dominated global institutions. Now expanded to include Egypt, Ethiopia, Indonesia, Iran, and the UAE, the group champions a multipolar world order where power is redistributed to reflect modern economic realities. Their recent summit in Brazil produced a joint statement criticizing unilateral tariff measures, a veiled jab at Trump's protectionist policies. But here's the twist: Trump's response isn't just about tariffs, it's about wielding economic pressure as a geopolitical weapon. Starting Monday, the U.S. will send tariff letters to dozens of countries. Trump's threat? A 10% surcharge on any nation backing BRICS' anti-American agenda, with no exceptions. Yet the details remain murky. Which policies are under fire? Is it the push for a BRICS currency? The group's criticism of Western military actions? Or simply their collective vision for a less U.S.-centric global economy? This ambiguity is part of the strategy, keeping opponents guessing while maximizing leverage. Treasury Secretary Scott Bessent has hinted at maximum pressure tactics, with the July 9th deadline acting as a countdown to higher tariffs if no deals are struck. While Trump initially floated the possibility of 70% tariffs on major trade partners, Bessent clarified the U.S. will stick to 10% for now. But don't be fooled, the real drama lies in the negotiations. Only 3 trade deals have been announced so far: a 10% hold on UK tariffs, a temporary 30% rate for Chinese goods, down from 145%, and a 20% minimum for Vietnam. These frameworks, as Bessent calls them, leave room for maneuvering and plenty of uncertainty. And this is the part most people miss. The U.S. is not just targeting BRICS members. Bessent revealed that 100 letters will go to smaller countries with minimal trade ties, many already facing the baseline 10% tariff. Trump's logic? Better to send a letter than wait for April's higher rates, he said. But critics argue this approach risks backfiring. Larry Summers, the former Treasury Secretary, warned that tariffs could fuel inflation and hurt American competitiveness. Meanwhile, Walmart and other retailers are already preparing to raise prices, countering Trump's claims that China will bear the cost. The BRICS response has been measured but firm. China's foreign ministry called the group a platform for cooperation that avoids confrontation, while Iran and others condemned deliberate attacks on civilian infrastructure, a reference to recent strikes by Israel and the U.S. But the most contentious issue remains the BRICS currency proposal. Though floated by Brazil's Lula in 2023, it hasn't gained traction. Still, Trump's threat of 100% tariffs on hostile members suggests he views any move toward economic independence from the U.S. as a direct threat. As the July 9th deadline approaches, one thing is clear: this isn't just about tariffs. It's a battle over the future of globalization. Will the U.S. maintain its economic hegemony, or will groups like BRICS redefine the rules? And who will pay the price for this high-stakes game? We want to hear your thoughts. Do you think Trump's strategy is smart, or is it a recipe for disaster? Share your take in the comments below.